Most people enter trading thinking it's a game of charts, patterns, and indicators. That if you can just figure out the right setup, the perfect moving average, or the magic candlestick pattern, money will start flowing in. But the truth is far more uncomfortable, because the problem isn't the system, it's often the trader. This is the hard lesson Tom Hougaard delivers in his book Best Loser Wins. This isn't another book teaching you how to read RSI or Bollinger Bands. In fact, Hougaard argues those tools are what keep most traders stuck, not because they don't work, but because they become crutches. Distractions from the real work, mastering your own psychology. In the beginning, Tom was like everyone else, obsessed over technical analysis, printed thousands of charts, drew lines and levels until his eyes hurt. He chased every indicator he could find, from Fibonacci ratios to arcane pattern theories. He even describes his early pursuit like a love affair, trying everything from Keltner channels to methods that sounded more mystical than practical. But none of it worked, not sustainably, not consistently, certainly not profitably, because the market doesn't care how many chart patterns you know. It doesn't care about your education, your work ethic, or your passion. The market rewards one thing above all else: your ability to control your emotional reactions. Hougaard doesn't claim to be the best analyst. In fact, he admits his technical knowledge is average. What makes him elite is his mind. He's trained it to lose without spiraling into fear, frustration, or revenge. He flows with the market, not against it. That's why he says, the best loser wins, because every trader will lose, but very few can lose well. Most will panic, freeze, overtrade, or worse, try to impose their opinion on the market. They'll see a stock crashing and call it cheap, see a breakout and say it's overbought. They interpret the market through their feelings, not its reality. Tom learned this lesson the hard way. He warned clients not to buy Marconi stock, which had already fallen from 1200p to 450. He called it garbage on live TV. He was fired. Later, the stock hit zero. Clients who ignored him lost fortunes. Traders look at indicators like RSI or stochastics and think they predict the future. But they don't. They reflect the past. Hougaard tells the story of a student who bought the Dow Jones on a brutal down day. Why? Because stochastics said it was oversold. The market kept falling. No bounce. That trader wasn't following the market. He was following hope, and hope is not a strategy. The real battle in trading isn't against other traders. It's against your own biology. Your brain is built for survival, not speculation. It wants comfort, certainty, and control. Trading offers none of these. It offers risk, randomness, and emotional pain. So most people react as evolution designed them to. They cut winners short, hold losers too long, trade more when losing, less when winning. They think like humans, not traders. Hougaard flips this logic on its head. He doesn't seek comfort. He trains to become comfortable being uncomfortable. He's like the Navy SEAL of trading, calm under pressure, trained to perform when every instinct screams run. This mindset is especially critical during a slump, when nothing works, confidence disappears. Slumps aren't just about losses, they're about identity. Tom describes his own slump in raw detail. Self-doubt, the urge to fix things by trading bigger or chasing setups. His advice is brutally simple: stop trying to trade better. Start trying to think better. Trade small. Go back to basics. Journal every thought. Focus on execution, not outcome. Because in a slump, it's not the market you need to conquer. It's yourself. Hougaard believes normal thinking always loses in trading, because normal is emotional, reactive, hopeful. Success doesn't come from finding the perfect edge. It comes from becoming the person who can execute any edge with discipline, detachment, and consistency. It's less about tools and more about psychology. A massive broker study analyzed 43 million trades. Over 60% were winners, yet most traders still lost money. Why? Because they lost more when wrong than they made when right. They cut winners, held losers. That's not a strategy problem, it's a psychological one. Brokers offer tight spreads, free education, advanced tools, and still, 80% of retail traders lose money, because no amount of tools can fix a flawed mindset. If you want to win, you have to stop being normal. That means holding winners longer than feels safe, cutting losers early, sticking to your rules when your brain screams to break them, journaling your trades and your emotional state. Tom even trains with breathing techniques during trading to stay centered. He reviews not just what he did, but why. He builds self-awareness the way others build strategies. At one point, he went 39 trading days without a single loss, made over £300,000. Not because he was right, but because he had control. The takeaway isn't that you need to become a robot, it's that you need to become aware. Feel fear, but don't act on it. Feel greed, but don't let it drive. Trading is simple, but not easy, because it pits you against your own programming. In trading, unlike in life, it's the best loser that wins. Thanks for watching. Trade smart, train your mind, stay sharp.